Greetings. Welcome to episode 3 of Optimum Live. It's festive time. That kind of date stamps this video, doesn't it? But that's fine because it's everything we're going to be talking about is about this time of year. My name is Dawes from Visual PR, the producers of this show. And as is always the case, I'm absolutely delighted to say it's not going to be me. And it's not going to be Mike Blaken and guest, as he tried to claim. It is actually, we're going to have Mike Blaken and Rob Stokes. So let's bring them out. Greetings, gents. How are you?
Good afternoon. All good. You?
Yeah, all good. Your first attempt at this one, then, Rob. Welcome to the studio.
Thanks.
It's a whole new, and I like the fact that, Mike, we got to grass him up, haven't we? Because you asked whether he'd researched this topic, and his answer was yes. I've been to Christmas parties.
That's it. That's the experience we bring.
Exactly. It's got to be done. It's got to be done. Listen, anybody that's watching, don't forget whether you're watching on Facebook, YouTube, whatever it is. Make sure you subscribe to the YouTube channel and put any comments or questions because we can put them up on the screen with your profile photo and your name. So if there's any comments, questions, because this isn't just an educational one, this one, we're going to go into a couple of key topics like accounting and tax sides for Christmas gifts, Christmas parties. Plus, we're going to go into something about this sort of time of year, about getting accounts in a timely fashion so that everybody can do the work necessary. These poor guys, look, Mike used to have a full head of hair at the start of today.
Long gone.
I'm allowed to say that, so we're all right.
That sun's shining strong up there.
Exactly. It's all right. And of course, what we're going to do is that we will be raising a Christmas cheer. I do have a coffee, I'm going to admit, but I've also got a tipple of gin and tonic that we shall all be, with our respective drinks, be raising a toast. Right, gents, let's kick into this. So first of all, let's start. And I'm assuming that we really need to separate these out. And I'm going to go to Rob to start with to sort of really get you settled into this show, Rob, of Christmas gifts and Christmas parties. Is it different rules for both of those things?
It is indeed. Well, first up, obviously, this is Christmas, obviously, but then the bar humbug is we do have Mr. HMRC looking over our shoulders, hence the whole conversation around. They do like to spoil a party. But
yes, just a bit.
Absolutely, we do need to separate gifts and parties. Whilst this time of year is particularly relevant for parties, it does need to be considered that it's annual event is HMRC's definition, so it doesn't just apply to Christmas. Obviously, we do have clients who, different religions, etc., don't do the whole Christmas party thing. So a lot of what we talk about will apply to summer events, like if you're having an annual barbecue as well. It's about that annual event for your business that is kind of open to all, as opposed to gifting, which can be your staff receiving a gift from you. It could be your staff receiving a gift from customers or suppliers, and the business gifting out to its customers or suppliers.
Actually, yeah, that does make me remember that there is several aspects of it, isn't there, to say the least. Well, let's focus on gifts to start with then. And if we turn around and let's go very specific of what we're doing with the clobber on and everything, and go, if it was Christmas gifts to employees, what does both, and I'm not sure which of you this should go to, what should we do, bear in mind from the employer and the employee perspective on that? Should we go, Mike? Let's go, Mike.
Yeah, let's go for it. So the big thing to do, it's a question that gets asked all the time, is can I give the staff a voucher to a shop or something like that? So that's really, it's a cash or a voucher. HMRC don't like that with being able to give it for free with no tax consequences. So most gifts to staff, if they come under trivial, which is less than £50, then it's all okay. But when it's a cash or it's food or drink, like it doesn't work, and they don't like it. So you either have to add it onto a pay slip, and essentially make them pay the tax, staff pay the tax on it, or there is a way of doing it where you do a settlement with HMRC and say, for every employee, we give X amount to them and we'll pay the tax on top of it. So it doesn't have to go near the pay slip, essentially.
Wow. Okay. So then that's if it's over £50 per employee.
Yeah. So you can give 10 gifts of £40 of something, as long as it's not a cash or vouchers or stuff, or it's regular, or it's a return on a bonus or a part of their pay salary or something like that. Then yes, you can do that and it's fine. It's only when a gift, if they gave a value of £100, then that's when it becomes a taxable problem.
And I can see, Rob, you nodding your head there. I mean, it just sounds to me as like an absolute minefield, really.
It can be, and I think, just to reiterate Mike's point, there is a way of the employer taking responsibility for that and doing a settlement agreement, which is great, because it's kind of, you are able to reward your employees how you want to, and you then take on the tax burden as the employer. Whilst it costs you more, it's actually then not detrimental, because the last thing you want to do is give your employee a gift and then sour that by going, by the way, you're now paying another 20, 30 quid of tax for it. So it's good that HMRC allow you the ability to go, right, okay, for this year, I've given my staff, I don't know, a Fortnum and Mason hamper, for example, and like, that's going to be way over your £50 allowance, but you can write to them and say, right, okay, we've done this, we'll gross it all up, settle the PAYE and the NI for our employees.
How specific does the accounting then become on that? Like, do they have to actually go, we spent £134.57 per employee times this many employees, therefore there's the total amount? Do they need to be that precise?
They will, when you're doing the form, they won't necessarily need it in that detail, but you do need to have that detail in case they go, right, okay, provide some evidence, because a lot of it is about them having the ability to trust your record keeping as the employer.
Yeah. And when do they do that then?
When do they do the
form and yeah, or just a form and declare it?
So at the time, generally you're doing it. So for example, one of my previous employers, we did that. We constructed hampers, the senior team, and gave them out to staff. And then we knew what we'd spent on doing those hampers, and then just divided by staff numbers and went, okay, it's over. Therefore, we'll fill in the settlement agreement at this time.
Right. So you do that in the December, get it filled in, get it put in, and jobs are good, and basically.
Yes.
It's the same with anything, like you're saying, with having the records to check. Every tax is a self-assessment tax, pretty much. So you go into them and saying, look, I've looked at my records and this is what we got to do, and this is the tax we owe. There's the mutual trust between it, but they will obviously, there'll be some where they'll do a spot check, and therefore you got to make sure you got the evidence and the records to back it up.
And presumably that's as straightforward as, like, you know, I happen to use Xero, or it could be QuickBooks, or whatever your accounting package happens to be, and you would be putting it in there under some kind of cost center anyway. Would you?
Yeah, we recommend like stuff like that. For staff, you'd use your staff entertainment code. If it comes into customers and suppliers and stuff, it could be under client entertainment is generally the ones. Or I think in Xero it might come up as UK entertainment, something like that as the code.
Right. Okay, that's fine. So that's in there. I mean, it's one of those ones that then just feels like it's incredibly hard work, but the benefit is that sort of feel good factor. You're rewarding, you're recognizing your staff, and so despite the work, it's still worth it.
Well, that's it. You always want to be looking after the staff the best you can. It's a bit that mutual sort of thank, especially towards the end of the year. It's a thanks for everything that's happened in the year. And you don't, like Rob said, you don't want to do that and go, oh, by the way, there's a hidden tax charge coming off your pay slip that you won't realise, but you'll be all docked 20, 30 quid come your Christmas paycheck. It wasn't that a lovely gift. And so by going and doing it and sorting it in the background just means that you can do it as a nice gesture and there's no strings attached from their side.
I mean, Rob, is there a tax benefit for the employer in any way, or is it just literally the mechanics of how it's accounted for that we're really covering?
If you're doing the low vouchers or you're doing a settlement agreement, yes, the employer is getting the tax relief on it. So that it is so you do get that element of tax relief by formalising what you're doing.
Okay. You know, I know it's a cynical question, but you know, it is that element as well that kind of going, yeah, there is a kind of a tax relief element to it as well that I can't profess to fully understand in. Before I move away from employees' gifts, is there anything that I haven't asked or covered on that side that's worth making sure people are aware of? Says Mike's checking his notes.
Yeah.
I don't think so. No, and I think it's just to sort of remember that the £150 a year allowance for Christmas parties and stuff for staff is for an annual lot rather than per event. So if you have what Rob said, like a summer barbecue, Easter party, Christmas party, the total would be £150, including VAT as the cost per attendee. And so quite often you'll have a party where the partners come along. So it's there's a little bit of split on the treatment there and stuff, but it's just, again, some people go, oh, that's right, the Christmas party, I didn't spend more than £150 on them, and then they do, oh, we had a summer drinks as well, we did that. But in theory, you should be adding them both up to make sure whether you're over this limit or not. And it's not, it's just the thing to be considering is around 150 for the year.
Yeah, and I pick up that that's a key point, isn't it? Because people kind of go for that event and then that event. It's like no, for the whole year. And that, am I right in saying that includes everything? What we've paid for the venue, the DJ, the food, whatever we choose to do drinks wise, putting the bottles on. If there's accommodation in there as well that is being covered, that we are in a situation that you've got to account for all of that within 150.
Yeah, so I had a client years ago. They won a multi-million-pound contracts and stuff. Took all the staff up to London. There was a bus up there. There was 2 nights up there. Huge expense. They must have spent 5, 6, 7, 8 grand or so, and it was for 45 employees. And you don't need to do quick maths to know that that's over £150. So when you sat there going, "Oh, you got to do this. You either got to tax them or do this settlement agreement." And like, what? But we just looked after our staff. It's like, yeah, but it's a little bit over and above what you would see as normal.
Yeah, and I mean, on that, Rob, go on.
I was just going to say the other thing we need to consider with this as well is the VAT implication, because generally VAT is not recoverable on entertaining, but for the staff element, it can be.
Good point. Yeah.
I thought this was going to be a nice, easy show, guys.
Merry Christmas.
Yeah. Oh, my word. Right. So you've also got that the VAT can be covered from the staff costs, i.e. what you've paid out that the staff are going to be enjoying in some way.
Yeah.
Right. And that includes myself as the owner, presumably, and things like that as well. Yeah.
Yeah, it does indeed. So it's kind of, it's a difficult one. So for example, if you're doing a Christmas party and you're taking your staff, but they're bringing their better halves with them, you have to kind of work out in total, this is my total bill, and then work it out how many people attended, right? Okay, of that, how many were staff? And then you can reclaim the bit on the staff, but you can't on the partners.
Right. Holy moly.
Come on, Chris, keep up.
Yeah. I'm making a lot of notes here. Now I understand why it varies as to whether it includes other halves or not. I always thought that there was, hidden agendas for that, but there really isn't. It's just an accounting thing. So the VAT, and that's the important thing, is the VAT can be reclaimed when it's your staff's expenses, but for their other halves, you can't claim the VAT back.
Yeah.
Right.
So
and
in this whole situation, so in that last paragraph they essentially spoke, there was 4 taxes to be aware of. You've got VAT, corporation tax as an expense for the company, PAYE income tax, national insurance, a couple of forms of national insurance technically.
My word. I mean,
Really
it just...
duty.
The other question I was going to ask is that the other halves, does that count within the 150 per that member of staff, or is that £300 then? Or is that irrelevant?
Well, it'd be additional.
Okay, actually it is, and because that's not a tax consideration in the same way, it's different, isn't it? So you got to account for them completely differently. Right, okay, so people, now I'm going to sort of like take, for example, a growing business, and it's the first time we've really been able to do this. Would you guys be advising, and I'm going to start with Rob, that we, as the business owners, should really engage with you to make sure that we're covering all the bases when we're as naive as we will be on that first 1 or 2 goes at it?
Absolutely, because it's also not just doing that one event, it's because HMRC refer to it as the annual event. So it's kind of, you need to start thinking about planning it for the whole year, about what you think you want to do to reward your employees, how you best going about it, because there is the trivial vouchers and all of that kind of stuff. So it's about planning it, because things like trivial amounts can't be related to performance, so it has to be effectively ad hoc. So it's kind of, you've got all of these considerations that build up over a year to go, right, okay, am I going to do a summer barbecue, for example? Am I doing a Christmas party? And a lot of people will go, okay, say it's our 10th year in business, we're going to do a party for that to celebrate with our staff. Technically, that doesn't come under an annual event because it's your 10th. So you're having a specific party. So if you're thinking early enough in advance as well, you're going, right, okay, I've got life stages of my business going 1, 2, 3, 4, 5 years. Do I put something in early on to go, right, we're having a celebration on each annual, because then actually when I throw a bigger bash for my 10th or whatever, it is actually an annual event. I could use up some of my allowance on it.
Right.
So it comes back to most things. If you come and talk to us, we can sit and try, and we don't have to script it to the nth degree, but the reality is there are things that we could do to help you put things in place to make sure you don't fall foul. Or actually, you know what, you're one of those businesses that's lucky enough to go, I don't mind, I'm going to do this for my staff, just give me a hand with doing the settlement agreement every year, because I'm more than happy to do that for my staff.
Yeah.
What if, and I'm probably getting too detailed here, what if I go 3 years in and I've not been doing the annual event, and I suddenly go, do you know what, I want to do sort of like an event that is an annual thing, and then a big one for the 10th, like you've just explained, but I've missed the first 3 years. Have I still got enough leeway for that will still be able to become an annual event?
It's kind of, if there's a reason for it to trigger that it is an annual event, then you're more likely to get, just because you haven't done it for the first 2, that's fine. You're then instigating it. So, for example, it's really easy with Christmas, because obviously Christmas is an annual event. So it's what is your trigger point to say, actually, you know what, this is going to be an annual event from now on?
Fine. Okay. And that probably leads on to another one that I was going to raise up, was like, you get a lot of companies, especially commercial organizations, where there's like an annual awards type night that they put on, recognizing, performance and whatever else. Does that come under the same thing?
Yeah, because you're determining that that's your annual event. We're having this celebration of our performance, our team's performance. So you're creating that as an annual event.
Fine, got you. And that still is a limit of £150 per member of staff for the year to be split over X number of events. So if you suddenly do an awards thing and a Christmas thing, that in effect is £75 per event.
Yeah, bread and scrape it is.
Yeah, exactly right. I mean, right, back to you then. What is the situation if I, as a company, do end up finding that once do the maths and actually, do you know what? I've spent 250 quid this year, whether it's in one party or whether it's over the year. What actually happens? And I'm pretty sure you've already touched on it, but I'm just trying to make sure I fully understand this, that I go, actually, do you know what? I've spent 250 quid now. What do I need to do and what actually happens?
If we do it as an example, the first event was £100, the second one was £150. It's the second event this time have taken you over that limit, so it's the second one that would trigger you into the settlement agreement paperwork, essentially, and the extra tax payment. So you would try and do it so the one that pushes you over is the smallest amount, the smallest party value. So you would kind of go, well, the first one was the £150 one, then it was the £100 event that pushed me over. And do it that way. And essentially it's just like most people will have a little gut feel, I've spent quite a bit, do the quick maths, and the easiest thing is to do is drop us an email, give us a call and say, do I need to do anything on this? I've done a quick check and I spent 500 quid on them. I treated them this year. I definitely know I'm over. Just let us know and we'll run the paperwork and we'll just look after it and just then say what you got to pay.
And what tax is that? What's that called?
It comes under the PAYE settlement arrangement. So it's essentially income tax and national insurance. It's as if you think about it, it's as if you get paid £100 on your pay slip and you pay your taxes there. It's just doing that process, but outside of the pay slip bit, so it doesn't affect their month to month pay.
I want to now quickly bring this back because I want to make sure we're not putting off employers from looking after their employees.
Rob said, don't do it. It's chaos. No.
It is a lot to think about. It does mean that, I was going to say planning primarily, but even after the event is that you can come to you guys and go, right, this is what's happened. They can, with you can fill out the form, submit, and it either comes from the employer paying the settlement, or if you're really mean, then it's actually going on the employees taxing, basically. Is that right?
Yeah, it is indeed. Yeah. So yeah, the best option really is just to bundle it all up. You're less admin and paperwork, and obviously, yeah, you're keeping the goodwill with those employees. For most of us, our biggest asset is our employees, so it's always good to be kind of taking the burden away from them.
Yeah. I don't know whether I'm able to go into this level of detail, but what are we talking tax-wise? What's the bill likely to be for an employer if they've gone and said, no, we'll do the settlement thing, and they've spent, you're probably better at give some arbitrary figures and then therefore an idea of what my bill as the employer would be.
Ooh,
is that impossible task?
Be your 20% tax, 12% national insurance, and I suppose your employer's nick on top as well. So I suppose you're looking at maybe 45%, but then you'll save 20%, 25% on your corporation tax. So roughly, if you were to chuck a figure up, 8, 10, 12, 35%, roughly. Yeah.
And I think we've just found why you don't get invited to many dinner parties there, didn't we?
Yeah, we're going to ruin it for everyone.
Okay. So roughly speaking, we're looking at 35% or whatever of the bill or whatever is the tax burden, if you will.
Yeah.
But the benefit is huge. Okay, I think we've kind of covered the employees side of thing quite a bit there. So we've covered the employees gifting, the employees partying, and their other halves. Yes, the partying will include everything for the party itself, the food, the drink, the accommodation, whatever you might throw at it. If we go back to gifts again, what about, we've talked about gifts to employees. By the way, again, anybody watching, if you've got questions or comments, that you might know, please do type them in because we'll see them and we'll be able to put them up on screen. What about gifts to customers?
Oh, this is a good bit, you see, because they got to be really entertaining, these presents. You've got real big scope. You've got to have it branded. You can't have food. You can't have tobacco, alcohol. So anything like that, all vouchers.
Oh,
So
the alcohol.
No,
So
you
I
got to
always
be
thought that,
branded.
like, bottles of wine and things like that would be a common one, wouldn't it?
I suppose, yeah. So you would. I think we tried it once to try and be clever with the rules, and we put our labels on front of the wine bottles, but it still doesn't work because it's still alcohol at the end of the day. But it's essentially you can gift up like trivial amounts to be taxed up. The difference is you can do it, and so you're trying to get tax relief by being an okay gift or not tax deductible for everything else. So I've gone down the route of it being something that you can put through your books, you save your corporation tax on. But essentially what you're giving away there is your branded pens. So I could go and give everyone a pen for Christmas. Happy days.
Spoilers.
Or pads of paper, those sort of highlighters and stuff like that. And that would all be tax deductible because it's advertising. But anything else, you can do it all, but it just gets what's called added back on the tax comp. So essentially, if you spent £2,000, you would have been expecting to save £1,000 of tax. Sorry, if I'd done the wrong maths there. I was doing 4,000 in my head, said a different figure out loud. So if you did £4,000 of gifts in to clients and stuff, you would expect to save £1,000 of tax. But if it comes under drink, booze, whatever, then you wouldn't save the corporation tax. So what you spend is what the cost is.
Right, so, and that's important to make sure that we're saying that is that absolutely you can go and do those gifts.
Definitely bring your accountant and a bottle of rum or wine or something like that. Like that, that's all fine, not a problem at all.
We didn't say suppliers, we said customers.
Chris, I'll drop your own mind in a bit.
Yeah. Actually, to be fair, we this is a two-way relationship. I mean, anything for you to add on that side of things, Rob?
No, I think it comes back to not letting the tax tail wag the dog in terms of, you know what, we still want to give these gifts out because it's right for us, with the goodwill, the gesture of thanks again to our customers, that actually, you know what, just because we're not getting tax relief shouldn't stop us doing those gifts.
Agreed.
But if you're, I guess it depends on your business. If you're in the right business and you can do all of the branding and the advertising with the gifts you're giving, as long as they're not in those banned categories, then it's great to do it. So I guess for us, from you, we could like have a video branded up of you talking Christmas or singing Christmas songs or something. That whatever you spend on doing that is absolutely fine because it's going to be branded up as you. So that's a perfectly acceptable. As a gift from visual PR is branded up as such. That's great. Yeah.
Are you saying then that we got to give sets of accounts as Christmas presents? There you go.
Well, you know, some of them get to 70 pages. That's an expensive gift, you know, nowadays with paper.
Yeah. And I think that's a key one to bear in mind. And I know that with this, understandably, this show is sort of, focusing in on the accounting and the tax implications. But I love your phrase, Rob, don't let the tax tail wag the dog sort of thing. And I remember Richard Matthews always used to say that to me as well, when you're trying to manage the tax and everything, but don't go chasing the dragon or whatever. So if you've got to pay tax, you've got to pay tax. And of course, a gift is not necessarily, and it's not supposed to be for a tax purposes. It is a thank you, or it's been fun or whatever else. So yes, you can do it, but you're not going to get any tax back. That's an important one. Is there, I'm trying to think, I mean, suppliers and customers, I presume, joking aside, they do come under the same bracket of gifting. I don't think there's likely to be anyone else that you'd be gifting, is there?
You get some sort of industries where they have a lot of subcontractors as well. Now, some of them treat, even though they are fully fledged subcontractors and that's all fine, they still treat them as their employees as well. They just see them because they're around a bit quite often. But they don't fall under staff for the staff parties and bits like that. They're all like external providers, essentially, is the way to look at it. They're all they'll all be classed as entertainment, gifts and payments to them. Christmas, if you held a Christmas party and you invited all your subcontractors along, they're external suppliers, so that would all be entertainment rather than staff, even though they may see them slightly as staff, but not staff for tax purposes or anything like that. But it's key that they're still external providers.
Okay, fine. All right, that's important to bear in mind. I feel like I'm about to pull a pin now. Self-employed versus limited company on all of the things that we've discussed. Is there variations on those things? Judging by your drop in your face, Michael, I'm guessing yes.
Not so much, really, because if it comes into entertainment and bits like that, for a sole trader, you're not getting the tax back anyway. So whether it gets treated really as a drawings or as an expense, but gets added back when it comes to the tax, us doing the tax calculations, it ends up with the same result. That it's more to make sure about the VAT. Again, you're not getting the VAT back because it's entertainment.
I always forget, and I'm going to come to you, Rob, because mixing it up more than anything, but apologies if you haven't got an answer for this. I've already said I use Xero, and I know I've got two distinct options when it's entertainment that says entertainment 100% business, entertainment, and I think it's 0% business.
Yeah.
And I always get confused which one I'm really supposed to be using, because I'm like, they're going, well, it is business that I'm doing, but I don't understand.
So this is about the splitting it between allowable and disallowable for tax purposes. So by default, it probably makes sense to dump it all into the not allowable and then pull out a later date if you're not sure the ones that are allowable. So for example, our party, if you do one event a year and you've set yourself a budget of £100 for your staff, then you might as well put it all in the 100% allowable, because you know I'm keeping within my £150 a staff member limit. It's all good. I'll dump it in there. Quite often the codes are triggered for the VAT as well. So if you're dropping it into the 100% allowable, then quite often it automatically pulls the VAT out. If you dump it into the not allowable, it won't allow you to reclaim the VAT either.
Well, what about this? And I'm going to get very specific. So I would go, let's say, for example, and Mike knows I was at this one last week, I went to a networking group's Christmas event. And whilst I was there, I was buying the drinks on the company's card. Where would that get accounted for? Would that be 0% or 100%? Because in my mind, I wouldn't be there if it wasn't for the business.
Were you buying them for yourself, or were you buying them for everyone else?
Probably more often than not for myself, but there was rounds in there as well, I would imagine. So, yeah, the timing might have been out slightly, but no, there was rounds in there as well. So they're both of the above, really.
So yeah, technically, you could probably get away with the drinks for yourself. You were there as a business, you were networking, so that's sort of subsistence when you're out and about. When you're getting the rounds of drinks in for everyone else, I'll remember to come next time. That'll be entertainment. So again, you might have, if you're opening the book up and playing the textbook, you might be each transaction might be going to a different place.
Oh gosh, really? It's the same as the other one I have is when I'm hosting awards, and I'm there and I'm hosting awards, and then although it's quite good, I don't end up having to buy too many drinks because part of it is that I'm being fed and watered there, so to speak. But you know, I will buy some drinks at the bar, and again, that's a gig that I'm actually being paid to be there, and so even more, I'm there going, no, that's through the business.
Yeah, that's essentially.
But that would be 0% business, wouldn't it? As not 100% business. 0%.
So that would be 100% business, really. Like if you're buying, especially for yourself, and that, because it's like a builder going and buying bricks. That's the cost of him producing his sale. So you're there. Your income is determined by being there for the event and hosting it and doing that. So as long as it's not seen as obscene, so you didn't go, like, it's a little bit, again, you get with people traveling, you're on the road all day and you stop and get a bit of lunch while you're out because you're not in the office. So there's no rule that determines how much that should be. But it's one of those where don't take the mick with it, because it's just not worth trying to prove to, if you have a tax inquiry, to prove that it wasn't what everyone else thinks it is from the outside.
Yeah, got you. Okay, I mean, that was just a kind of very specific example that I was able to refer to.
I think also don't take the software coding too literally, because it's designed to give you a bit of a steer. It's not meaning it's nothing to do with your business. It's more, it's business tax allowable or business tax not allowable. That's more where they're focusing. They're not saying it's nothing to do with your business, because everybody acknowledges, HMRC will acknowledge, there is entertainment that goes on. You do things for your customers, your suppliers, your staff. It's about actually that for them, it's more about, okay, we acknowledge it's happening, so you can put it through your accounts, but actually we want to restrict the amount that you can get tax relief on, because we don't want people going overboard with it.
Yeah, that makes sense. And I think that's the key one, is despite everything we're saying, if we're not saying as a company you can't or you couldn't or shouldn't, we're just saying as in there might not be tax relief on it all, but it just still goes as a company expense is not a problem.
Yeah, absolutely. Because obviously, again, that at stages, some people go a bit extravagant, and then you start opening yourself up, going broader to the Bribery Act, etc. And so again, it's kind of, if you're being sensible about what you're doing, it's allowable in a good sense of acknowledgement. Yeah, do this. You're treating people right, as opposed to going, right, okay, I'm taking them out, I don't know, 2 weeks out to Monaco or something for a Christmas party. That's bordering then on bribery.
Yeah. I mean, I don't think we should go all the way into bribery, because that's probably a whole other area altogether. But it is still relevant to Christmas gifts. Sometimes can't be accepted under a recipient's organisation's rules. And presumably, and I think this is the only depth we need to go in this one, and correct me if I'm wrong, but is that it's the onus is really on the receiver of whether they can or can't, rather than the giver on that one. It's not them that's breaking any rules.
Yeah, it's down to the organisation to have in their own policies what they deem as an acceptable gift
to receive.
So to receive, yeah. So we have a kind of, we're supposed to tell John we've got a register of gifts received. So we should be telling John that, for example, we've been given a couple of bottles of wine, or we've been invited to go and watch a game of sport. We should tell John and say, right, okay, kind of the open market value of this is X pounds. Therefore, he'll be quite comfortable, or he'll be going, you what?
Yeah. That's fine. Right, listen, I think we've done the gifts and the parties enough. We're going to move on to now providing the accounts at the end of the year. I'm going to come to you first of all, Michael, because I know that you've had situations where you're going, everybody's suddenly throwing them at me at the last minute, and you're snowed under. When should me as a business owner be getting all the figures over to you?
So with a limited company, we would already have done some of the work before the year's out. So we do know what the tax figures are likely to be, because we've done that planning beforehand, rather than just getting to the end of the year, then sort of going, what's happened? But because we know that, I always like the idea of about sort of 2 to 3 months after the end of the year. There's not a lot of businesses now where they get invoices coming in 6 weeks late, or they got lost or something like that. If someone's receiving stuff within a month, they've got a statement, they've seen they're missing the stuff. So 2 to 3 months is good. We'll have it in for a month, turn it around, have a meeting. But what that tends to mean is that leaves us about sort of 5 months after the year end, which we can do the review of the year gone, but we're also partway through the next year, so we can start having a look forward as well. So we can give that value where we've got this is what last year was. Yep, this is what we were predicting when we did it sort of the time before that. And then now we're looking at it now, looking forward as well. And that's the major thing, is to be forward into the next set of accounts. So that sort of time is good, but we get we get a lot of people who bring it out as last minute, especially with the tax returns at the moment. That gap between Christmas and New Year, people like to do it then because everything's shut down. So we'll come back in January and there'll be a whole load of stuff arrive then, ready for January 5. And this will never get any sympathy with anyone. It's accountant to accountant. We get sympathy to each other, but to anyone else, no one really cares. It's just that's your business to deal with it. But I think a lot of people think that if they just drop it in January, there's enough time because they're the only one dropping their tax return or their set of accounts in at that point. I had a discussion with someone yesterday to say, he goes, I've got it already. I said, well, if you've got it already, can you just send it to us? Because I don't really want my staff working till the early hours because everyone's decided to drop it in late. And like I say, it's only us that we're feeling sorry for ourselves on that. So I fully appreciate it. No one else is going to go, I don't care. It's off my back. You guys look after it for me. So,
but it does make sense to get it through when you guys have got the leeway to get it done. In a timely fashion, whereas you're putting pressure on. Even if we didn't care about the pressure you personally are under, is that we're there going, well, we can't expect them to be turned around as quick if you're suddenly stacked up with everybody's. But the other one from my side is that I want to know what things like my corporation tax bill is going to be and all of that as early as possible so that I can plan for it.
Yeah, well, it's easier to. Go on, Rob.
Just to say that is absolutely right. Whilst we may have touch points with the client during the year and have done, as Mike said, some pre-planning work, etc., so we have a rough idea, it's actually finalising that off as early as possible. So the last thing that a client needs is to have a really good year, have a massive tax bill, and the following year trade dies down. And they've suddenly then, if they haven't put it aside, they've got to find the cash to then pay that tax bill. Yeah. So the earlier you've got it, the easier it is to do the planning of, right, I need to have this amount in my bank account by this date to be able to pay it over. And if you consider for the self-employed, when they have to make payment in January and then one in July, the sooner we get a tax return prepped and ready, we can then go, right, okay, you've had a rubbish year this year, we can apply to reduce your payments on account. So you don't have to find so much money in July. Yeah. It's all about getting to know what your bills are. All right, some people will go, well, I don't want to know the nasty news. It's rather the nasty news in July, so you've got time to plan all the way up to January to deal with it, as opposed to dropping it into us on the 30th of January and we're going, by the way, tomorrow you've got to pay a bill of this.
Oh, I remember doing that one year. We took over a practice 6 years ago and I was delivering some tax bills, some horrible tax bills, in the week leading up to the deadline, and I felt just like a grim reaper dropping, oh, you owe 25 grand next week. I hope you got that saved. I hope someone's told you. And we'd only known the client a few weeks at that point, and that was our first touch point. Hi, my name's Mike. Here's your tax bill for 25 grand. Enjoy. There's no one's winning out of that situation because the client's going away into sheer panic. The taxman's not getting their money because no one's got that money saved, and we're going, oh, isn't that a lovely experience? The accountant's just giving us a tax bill for that next week. But as Rob said, we get it in early. We can go, look, your tax bill is 25 grand in 8 months' time. Let's start working away towards it and looking at the next year's accounts early to reduce those payments on account.
Agreed. And again, speaking as a business owner, is that's exactly the case for me. I want to know as early as possible. And my wife, when she was did a lot of self-employed work, she wanted to know what her on-account commitments were going to be as soon as possible, so that she could plan for it, and what does she need to whittle away, all those kind of things. On that subject, actually, and I've never really got myself disciplined enough for this. You touched on about saving away, ready for that corporation tax. What do you, and I'm going to go with Rob because he's nodding more, is what
is that the trick, is it?
Yeah. Darn it, I've given it away. Is what would you be advising me as a business owner to be squirreling away ready for that, like even a percentage or a value or something?
For me, it's very simple in terms of, if you're, particularly as you've referred to Xero, if you're on there, run a P&L every month and just go, right, okay, I'm going to put 19-20% of that aside.
Of the profit?
The profit for that month, yeah. Because worst case is you're probably going to be overstating the amount you're going to pull aside, because you won't be dealing with a lot of the accounting adjustments for tax that we deal with. So if you're, as a rough measure, you're taking that and pulling that aside, you've got a nice pot. And I know a lot of the kind of the online banks, particularly nowadays, in your bank account, you can assign pots. So you can go, this is my tax pot. So you don't even have to open a new bank account. So I know Starling, for example, they allow you to create little pots. So you can go, right, okay, this is my tax pot, this is my VAT pot. And all you're doing is it's a notional transfer within that bank account.
I think I need to speak to you guys about this in more detail because I haven't got any of that set up. And what percentage did you say, sorry, of the profit?
Well, if you're relatively low profit making, so say around 50 grand a year, anything below that, then if you're putting 20% aside, you're more than covering yourself.
Okay.
And even if those big businesses were they're paying tax at 25%, if they're still putting 20% aside, by the time we come and do the accounts 3-4 months after the year end, they've already got most of the tax money saved. It might be that you go, oh, if a huge business, oh, your tax bill is 200 grand. All right, you've been saving 20% and you've got 180 grand. They're there. They're pretty much there. They're 90% of the way there. So that's fine. And it's just making that commitment to put something aside. We get many a client who's been in business for 20, 30 years who are quite happy that they wing it when it comes to January and July. They've always done that. They're happy with the winging it approach, and they just get by. Whereas a lot of other people now, with the whole society going on to monthly payments for cars, for finance, everything like that, to actually comes in, push the money out monthly. Like you think with our subscription yourself, like it's a monthly transaction. Everything's monthly, but with so many things, that's what people like. So if you go, right, money comes in, out, right, that's my tax money, and away it goes. And then when we come along to say, oh, here's your tax bill. Oh yeah, I've got that saved. Oh, brilliant. I've oversaved. I've got my little holiday pot there.
Yeah. I know that would be good. Yes. And I know that my wife, because obviously I'm thinking from a limited, but with the self-employed side of things, my wife would always go away and she'd love it if she'd actually saved a little bit more than was necessary, because it was an enforced saving side of things. But I think I need to be better at that, because I tend to just go, oh, I've got that much in the bank account. That's that. I don't think deeper, which is not a good idea.
Same for those that are VAT registered, that you've got a quarterly return to do, but when you're on your software, you can run it every month and you can see what it's building up to. So again, you can put aside, nominate that. So you've got the quarter to build it up, and then you've got another month and 7 days to pay it over. But it allows you that breathing space to go, you know what, I can put a bit aside every month. So again, you're not killing yourself with trying to scratch around and find 25 grand to settle your VAT bill. You put like 7-8 grand a month aside.
But you're saying it doesn't need to be a separate bank account for that.
You can do it as separate. Some people like the whole, I'm going to have a separate bank account, deposit account. I don't look at it often, so it's moved aside. But with some of the more modern online app-based banks, they create pots within your main bank account, and so it kind of moves it across. So the money's still sat there physically, but it allocates it to pots within your bank account.
Right.
Yeah, and those ones are all app-based on your phone. So you open your phone and it looks like you got 4 or 5 bank accounts, but they're just little side pots, all there. You can rename them, change them, do anything really easily. Loads of clients we got these Challenger Bank apps, all with these pots and spaces and stuff, and they all use it. And we can go in, see what they've got saved as well. We can go, oh, actually, so again, I've done some planning for someone this morning, 10 months through the year. And he goes, can you just let me know before Christmas that I saved enough money? And I can see what he's got saved because it's in a little savings pot. I can see what the tax bill is. And I can go, yeah, you're good. You're ahead. Keep going.
Right. I need to look at that because I'm just with a high street bank. No names. See, it's like I've done this before. But it is just a high street, and it would actually have to go to them and try getting more accounts opened, whereas maybe I'll have a look at this because it'll just manage it so much better for me. It's fine when things are going well. It's when the cash flow just sort of gets a bit squeaky bum that you're kind of not quite so comfortable with it.
I think is giving people that discipline, that it's moved aside. So when you're looking and you've got your main current account and it's saying you've got 5,000, it means you're not going out and being not wasteful or extravagant, but you're feeling a bit free and easier. It says 40,000, but actually the reality is 35,000 is your tax bill, but it's still sat there. At least if it's in a pot, you're going, right, okay, I've still got that nasty payment to make. I don't really want to be touching that.
No, I agree. And I think I'm going to get more along that way, because I know that, without obviously going into details, my corporation tax, in theory, and I'm going to come on to something about this in a second briefly, because we're rapidly running out of time, but is that I have a reduction in my corporation tax bill based on director's loan account that was made up from last year that comes back again, type sort of thing. But I need to bear in mind that whilst that makes it feel very lovely this December, next December is not going to be lovely. It's going to be ghastly again, because there's nothing to reduce that next year. So the idea
But
of
you would have already had the heads up, Chris, what your tax is before the year's out.
Exactly, and that's the key thing. And so from my side is that we're talking that I'll have that sort of understood by, I do the normal fiscal year, so April to March. So I'll know by the summer what my December bill is going to be, won't I?
100%, and you should know sort of within 90% what it is in February, March time before the year's out. And if not,
really?
I'll go kick John upstairs to make sure that happens.
Make sure, yes, John. I mean, it makes a difference, and it means that I'm aware of it. Now, I am going to very quickly, and I don't know how much you know, because I believe this is a fairly new, such a HMRC thing to do, of that they've now done it where it doesn't automatically reduce. I forget what the title is. So where I paid director's loan last,
tax.
That's the one.
Your naughty boy tax.
It doesn't. Yeah. It doesn't come off. It doesn't come off the corporation tax by default. At the moment, it's looking like I potentially have to pay the full thing there, and then when it suits them, I will get that back again.
And
you form that might be able to resolve it, but it's all new and thrown at you guys and everyone else as well.
Well, we can't actually legally claim it until the day when your tax is due to be paid to them. And that used to be okay because they would deal with it pretty quickly, or you could send a letter in the post a month before, and by the time they get to it, it was around the time it was due. So give or take a couple of weeks, it was all right. You paid £1 of interest and it was all right. But now, because they take so long to deal with it, I'd done that for someone, but now they changed it. There's a form. Fine, we'll go do the forms, get all the way through to HMRC. Bear in mind, we did this in the middle of October for another client, and they said, oh yeah, we'll deal with it on the 6th of February. So then he's got debt letters, 4 months of interest and stuff because you haven't paid it. Now, you could argue, anyone could argue, well, it should just be offset. Why should you pay something when you know within a couple of months you're going to get a refund? And I think this is where you're always playing the reality against the textbook. In theory, you get it back and it's all nice and easy. But because HMRC are understaffed at the moment, the time to get these requests turned around could be a couple of months. And so then you're sat there. And so a lot of people are now opting to go, sod it. Do you know what? I'm going to pay it, and I'll wait for the refund to come back so I don't get these letters, and I just don't have to deal with the stress, because people naturally will get stressed by when the letter coming through saying you owe us £2,000. All right, but you owe me £2,000, but I'm not sending you a letter for the same thing. Or if I do, you're not going to listen to it. But it's just taken, like, people are just going to work out what's best, and they might go, I'll pay for it all and I'll take it off the next year's tax bill.
Which it won't do anyway. Right, because that's what I'm in the throes of sorting out, and I just wanted to make sure we just sort of let people know that there's an interesting challenge on that side of things to be aware of. But either way, come through to you guys. Have we covered the providing accounts sufficiently now? Anything else you want to shout at people on that side for?
No, I think a lot of our clients are good, are pretty good, really. There's just a small handful, and it's this time of year. It's the same with, I would say, probably 75% of the accountancy firms. It's this time. Yeah. But like I say, we're not getting any sympathy from anyone, so we'll just drink our beer and sit quietly, and it'll be all right.
And on that note, we may as well. It's like it's the final thing that we need to do here is raise a toast to as we then hear the drinks open. I mean, guys, first of all, very Merry Christmas to everybody watching, but obviously to you two here as well. Start with you, Mike, because you're in the main one. Give us a quick sort of thoughts of 2023. looking forward to 2024 and your Christmas toast.
Yeah, 2023 has been a tough year for most people with all the different sort of economy problems going on, but I think everyone's got through it. Everyone survived, grafted, pulled up your sleeves and got on with it, which is a typical sort of mentality of small businesses. And bring on 24 and let's go and get better and do more.
Absolutely. I'll come back to you for the Christmas toast in a second, because Rob, the same for you, 2023 and looking to 24.
Very similar to Mike. I think 23 has been a tough year for businesses in a lot of ways. I think a lot of things outside their control. And as usual, with the press, we're trying to talk ourselves into a worse situation than the reality is. And I think 24 is about, there's still a lot of opportunities there, but it's about doing that planning exercise to make sure you're best positioned to take advantage of them. When things are running nice and smoothly, it's a lot easier to drop onto projects very last minute. Now, I think things have tightened up somewhat. It's kind of make sure you're planning ahead, knowing what your priorities are so that you've got your ducks in a row ready to take advantage.
And getting things in early. Absolutely.
Absolutely.
Well, I agree, and it's so lovely to see. Obviously, you as I don't hide, you guys are my accountants, and it always feels good to sort of like have you batting in my corner and managing it. So thank you for a great 2023, and I look forward to 24. I'll say it. Merry Christmas to you all. Have a wonderful time, Rob.
Merry Christmas all. Enjoy, but not too much.
Yeah, Merry Christmas, everyone.
So that wraps up this show. It's been an absolute treat, and we'll be back in January. We haven't finalised the exact details of what that's going to be. Heck, for all we know, there was an outside possibility February show could be about, would you believe, a spring statement. We're in rumours. We think we all know what that could potentially mean later in the year. Don't get political. Let it go. Let it go. Right. So we'll let you know when that's going to be. Make sure you catch in. And obviously, you can watch this live show back at any time. If any questions come out as a result of these conversations, please do drop the guys a line and they'll be able to answer you. You've got Mike's email is mBlaken@optps, so optimumprofessionalservices.co.uk. Rob's is rstokes@optps. I can't remember why we put this one up, but we put this one up, Mike, at one point. Why did we want to share that? I think that was
for the networking events, and if you wanted to get on newsletters and on our email list.
The email list, because they do send out really helpful, really informative newsletters, and they run free networking events at their premises, alternating between Swindon and Cheltenham. So, get yourself onto that list, whether you're a client or not a client yet. Drop them a line. But they're some of the key email addresses. Make sure you subscribe to youtube.com/@OptimumPS, Optimum Professional Services, and it will keep you aware of when we're going live and things like that in the future as well. But from all of us here, it's been an absolute treat, and we will see you. Unbelievable to say this, guys, isn't it? See you in 2024.
Cheers, everyone.
Cheers, guys.